The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 13th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. Hope everybody out there had a great weekend. Thanks for joining us this morning. Let's go take a look at one of our tools. This is the tool I call a blessing in disguise. Have you ever been faced with a difficult situation that, you wish, quite frankly, it would just simply go away? I know I have, and it's more times than I would care to remember. Or should I remember? I'm talking about experiences that were nothing more than a real pain in my rumster, or better yet, something that I tried so hard to figure out but just didn't get it. Could have been a trade that I tried and tried and tried, but it just didn't work. I don't know about you, but when I take a moment to reflect on those experiences, when I finally pushed through all of the obstacles, what I can tell you is that in reality, those experiences were really a blessing in disguise. I remember reading a story about Abraham Lincoln. He was walking down a country road on a day and came upon a farmer who was plowing his field with a horse-drawn plow. As Lincoln neared the farmer, he noticed a big horsefly that was bothering the horse. Of course, Lincoln started to brush the horsefly away, and the farmer stopped him and said, "Don't do that, friend. That horsefly is the only thing keeping this old horse moving." So why remember that story? Well, simply because whenever we reflect upon situations where we couldn't see the value of what was really a nuisance, or that we were tempted to blow off or just simply brush away, I'm reminded that in hindsight, that very situation is really a blessing in disguise. I'm convinced, absolutely convinced, day after day after day, that one of most life's important laws when facing challenges is the following. Or at least, this is my approach, and it's my incantation, and I suggest you use it as well. It goes like this. This experience came to give me growth. And if you're not growing, that's right, you're dying out there. It's all about growth, folks. It's never about what happens to us in life. It's always about how we handle what has happened. It's so important for each of us to remember that we are greater than any problem, any condition, any experience, and any situation that is handed to us. All that we need to do is to stare fear in the face, look into the eyes of doubt, and say, this horsefly is really a blessing in disguise. Well, let's go check out the horseflies of the markets out here right now. We've got the Dow futures off 23 points. They're trading down at 16,358. S&P futures off $4.50. It's trading at 1833 and a quarter. Nasdaq futures down about 7 points, trading at 35.54. Russell 2000 off about 4 points, trading at 11.57 and change. Our call-in number is 877 927-6648. Feel free, give me a call. We can take a look at your stock chart, index, ETF, whatever it is that you'd like to look at. We've got Goldilocks is back 40 cents right now. It's trading at $12.46.50. Silver off 15 cents. It's trading at $20.07. Light sweet crude back 57 cents. It's trading at $92.15. Natural gas, man, that has been on the move. That's a gas. It's up 17 cents. It's trading out at $4.23. If we take a quick peek around the globe out here, we're going to see over in Europe right now, The DAX is up 21 points, 0.25%. Not a big deal out there. The FTSE is up 10 points. A little under 0.2%. Over in Asia last night, really a mixed bag. Nothing major. Yeah, you had the Nikkei up 31 points. That's 0.2%. The FTSE, I'm sorry, the Hang Seng. We already covered the FTSE. The Hang Seng was up 0.2%. That was up 42 points. And down 0.2%, which is only trading off $4, was the Shanghai. So where do we begin? You know, if you're watching us on TigerTV, and I hope you are, if you're not, you listen on the radio or your mobile device at TFNN.mobi. Thank you for doing that. Remember, you can always catch the live stream of this show by going to the homepage of TFNN.com. Upper right-hand side, you'll see that button, 3 smartphones on it. Click on that. The show will stream live to your device, and we're going to be looking at the euro, Japanese yen. We haven't done this for a little while. A chart on my screen, and I'll describe it to you. It's the 120-minute chart. 120-minute chart, we can see an A to B equals CD down pattern that is forming. That really doesn't bode well for the direction. Can't tell you what the price level will be, but certainly doesn't bode well for the direction of the U.S. stock market. We can take a look at our A point of the A to B equals CD, and that's going to be the overbought condition that took place at 7 o'clock in the morning on December 27th out there. The euro, Japanese yen got up to a high of 145.67. That's your A point. Your B point on this move here of the A to B equals CD down is the low that came in at 9 o'clock in the evening on January 5th. Made a run down to the 141.48 before it decided to really retrace and then kind of consolidate for a little bit. And it retraced up to a level, did about a 0.382 retracement. That's a dangerous sign out there. That was at 1 o'clock in the morning. That was on January the 8th. That got up to 143. How about that? That was the actual high out there. You got to love that. Now, what it's doing, you can see it's trading towards the session lows. It's getting into the extreme oversold condition on the 120-minute chart out here. That means you can take a breather just simply to work off that oversold condition, but it looks to me like what the euro Japanese yen wants to do is either run down to the bottom of the descending price channel. I can't tell you whether that's really a good bottom of the descending price channel. It just hasn't formed enough data points down there. But the 1-to-1 A to B equals CD, and that seems more logical to me as to where price will head to at a minimum. And yes, I did say a minimum, is 138.95 out there, because really after only doing a 0.382 retracement, price ought to move lower. That lower level ought to be 137.80, maybe 136.35 out there. To me, that would be the logical spot, probably about 136.35. So we want to be paying attention to that. Because that, folks, the directional indication, a correlation between the euro, Japanese yen, and the U.S. stock markets there is none better out there, and that correlation remains intact as we speak. Now, doesn't tell you how far price will fall or how far price will rise. It's just really a directional indicator, and right now that directional indicator, it's pointed to the South Pole out there, so we'll be paying attention to that. If we take a look here at the index futures, let's go take a look at the daily charts out here. Let's try to get a little bit larger perspective and see where it is that we're at. If we take a look at let's take a look at the NASDAQ futures. Let's go see what the NASDAQ futures in essence have done here. If we take a look at the retracement, really all the NASDAQ futures have done, quite frankly, is they came back and they tested the Ben Bernanke birthday bash. Wasn't his birthday? The Ben Bernanke going away bash party. And that was on December 18th. And that high was 3509.75. You had big volume behind that move. The NASDAQ futures, which were the weakest last week, they came back and they tested that high. They did it on lighter volume. They rejected price. They bounced higher, as we saw last week, even after the poor, and I do mean poor, piss poor, jobs numbers that came out in the marketplace last week out here. We still had an end of the day surge. Well, it wasn't a total end of the day. It was more towards the afternoon from about 12:30 on time frame. Of course, we'll go into that 30-minute chart and take a look and see what was done there. But in the case of the NASDAQ futures on the daily chart out here, if you take a look at retracements, even if you just look at the last leg off of that December 18th low to the high that was put in on December 31st, what you'll see is, just maybe about a 50% retracement, and then that area was rejected. Nice big old bullish engulfing candle, quite frankly, that took place here on January 7th. That says those lows out there from January 6th out at 3505.75. Those are important lows out there to be paying attention to, and that is by taking a look at the daily chart. That is on the NASDAQ futures. Let's take a look at some of the other daily charts out here to see what it is that we see. Here is the ES Mini that had formed that's also on Uncle Ben Bernanke. Well, it was the 16th, actually. The 16th, which was a Sunday, Monday. I remember that evening specifically. And you formed, or what formed on the ES Mini was a nice 0.786 Gertley buy pattern. That turned into a little bit less than a 1 to 1.272 A to B equals CD up. That is the ultimate of any Gertley buy or sell pattern. The actual price projection was 1850.70. Did not make it up to that level. On December 31st, it got up to a high of 1846.50. You got to give a big hand to the ES Mini. 1846.50 versus 1850.70 out there. And after the way that the futures had pushed lower on that Sunday evening after some data out of China, and then the bulls came back, and then after the Fed release minutes there on Uncle Ben Day out there, they pushed lower, and then, man, that was a big move, 40-plus points or so to the upside out there. Big, wide-ranging bar. Markets do not typically end on wide-ranging bars, and certainly in this case here, it did not. So it made that 1 to 1.272. Price right now is traveling just below that December 31st swing point. That's what we want to be paying attention to. That number is 1834.25. Price did manage to close inside there on Friday, so that's usually an indication that it wants to go test the highs. However, it's got that competing trend right now, and that is with the Euro Japanese yen. So futures are doing really not too shabby right now at the moment, with the S&P futures off 5.5 points, and with the Euro Japanese yen getting in that extreme oversold condition. That was a 120-minute chart that we were looking at on our screen. If it's oversold in a 120-minute chart, I can guarantee you one thing: it is oversold in the 30-minute chart as well out there. So I know it's kind of a tough call out here at the moment. Let's take a look at that 30-minute chart here for the Dow. Well, let's take a look at the daily chart here for the Dow futures here first, and take a look and see what it has done. Dow futures, they made also that 0.786 Gertley buy. Dow actually probably gave us a even better signal, quite frankly, than the ES Mini. And what I mean by that was on December 16th, at the Sunday/Monday session out there, as price pushed down after the China PMI numbers, I think it was, that was released out there. Price had pushed down into the top of that 1,000-point consolidation. That was the final rejection of that move. And then, in essence, it has come close to, I would have to say, it completed the move almost to the T. The completed move might have been about 16.6. What we actually saw was 16.540 out there. But that's good enough for my book. That was December 31st. But you can see here, not a lot of destruction. Yeah, the Dow has been a little bit of a weak link here lately. It was the NASDAQ. NASDAQ has relinquished that. It's no longer the weak link of the futures contracts out here. But really, not that far off the high. 16.540. You're trading right now at 16.346. Not a ton of destruction out there. Of course, what we know that we're paying attention to, we're really paying attention to what? To the 30-minute chart inside of the Dow, because if it can break to the bottom, it will break a 160-point consolidation move. That'll take the Dow futures down to about 16,176. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Moving here in the pre-market to the downside, Intercept Pharmaceuticals. We spoke about them a couple of times last week as they went from, I think, about $80 to, I don't know, $445 or so. They closed out, in fact, at $445.83 on Friday. Right now, they're trading out at $338.60. That's a little bit of a roller coaster out there. So it's trading off $100 here this morning after a real rise out there. So I don't know that anything is wrong. They just provided some additional details about the results of the clinical trials that we were doing. SodaStream, it's off this morning as well. They closed at $49.89. They are trading out at $41.50. So that's quite a drop out there. Lululemon, they closed at $59.60. They're trading out right now at about $51. Looks like they cut their earnings per share forecast, their revenue numbers for the fourth quarter. Apple is trading down this morning. It closed at $532.94. It's trading down about $2, so not a big deal there. To the upside, you've got Enpro Industries, NPO. I don't know, see any news behind the big move here. Let's see, holding an investor conference. Maybe there's a buyout proposed there. They closed at $59. 79.21 right now. They're trading at 79.37. So there is something going on there. There's definitely something going on at the Jim Beam or Beam Inc. BEAM. They're being bought out by Suntory, or at least that's the deal that's proposed. A $16 billion deal out there. Suntory, a Japanese firm. Any of you who have traveled over to Japan, you most certainly have seen the Suntory label out there. You've got Tecmira Pharmaceuticals. TKMR is the ticker symbol. They closed at $9.98. They're trading up at about the $13 level right now. You got Twitter that closed at $57. It's trading at $59.70. Velocity shares, Direction shares, UGAZ, as a result of the move here in natural gas this morning. That's trading up at about $20.50. It closed at $18.54. Of course, we're going to keep our eye on the 30-minute chart here for the Dow futures contract. I can spit it out here. Why? Yesterday, Friday, I should say, as the market responded negatively to those job numbers or lack of job numbers out there, price pushed lower. And as it was pushing lower, it was pushing where? Into the consolidation level. And it was pushing lower into the consolidation level. And this is about 12 noon out here. Got down to the low, came in right at 12 noon. That was at 16,317 out there. We saw no bearish sign, as I'll blow this up on my screen here. No bullish sign, I should say. We saw no bulls rush in until the time frame of 12:30. And then at 12:30, a nice big old bullish engulfing candle out there. Of course, when the market had pushed low like that, it moved that relative strength index, that 14-period relative strength index into where? Into that extreme oversold territory out there. So it had to bounce. And the type of bounce that we saw inside of the Dow, nothing to write home about. If you go from the high where it fell off of that cliff, that was at 8:30 in the morning. That was at 16,460. It did probably about a 50% retracement out there. Now as we move this off to the side here, that level looks like it's going to be attacked again here this morning. That's an important level because it has been attacked on, 4 or 5 separate occasions out here. The first time down on January 3rd, that level held. It got attacked again on January 6th. It held. It got attacked again on January 9th. It got attacked again on January 10th. It got attacked again on January 12th out there. So it has been it's tested, and the market has not been able to bust down through that level. I'd say a close right now between the low, I'd say below 16,313. And here's the deal. Let's say it closed. This is a 30-minute chart, so it becomes relatively easy to try to figure this one out. And that is a close below the real consolidation level. I'm going to use as the consolidation level out here about 16,336. So a close below 16,336, not 335. You'd like to see 20 points or so, 20, 25 points. A close below, and then a move up. And the move up, then holding that 16,336, because when you break a consolidation, what you like to see the market do is go back and test it and make sure that it really is a true break. And in this case here, that's what you'd be looking for. And then if that's the case, that's what sets off that cascade fall of 160 points or more inside of the Dow out there. And if it can't bust it down at some point in time, guess what it's going to try to do? Yeah. It'll eventually say, enough work to the downside, let's go try to bust this thing to the upside. But right now, the side that it's trying to bust through is to the downside, and that is in the Dow. So when we get back from this first break, we'll go take a look at the market open, then we'll go take a look at Goldilocks and silver and light sweet crude and natural gas and basically anything else that you'd like. Just give me a call at 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 15 points. Trade at 16,421. S&P off 2 points at 1840. Composite down 1 point at 4173. Russell 2000 down 1 point as well. Apple up 21 cents right now. Microsoft back 18 ticks. Google up $7 and change. Leading the charge, the upside is Alnylam Pharmaceuticals, ALNY is a ticker symbol. That's up 29% here. Enpro Industries, NPO, that's up 30%. Beam is up 25%. Then Google's up about 0.5%, up $6 and change. Clovis Oncology up $6. Netflix up $6. Kihu 360 up $3.90. Lockheed Martin up $3.40. Twitter up $2.70. F5 Networks up $3. Techmira Pharmaceuticals up a couple of dollars out here. To the downside, Intercept Pharmaceuticals, of course, that's to be expected. Leading the charge dollar-wise, it's off $120. And SodaStream down $10 and change. Lululemon off $8. Cree down $3. Palo Alto Networks off a couple of bucks. Volcano Corporation off a couple of dollars. Aaron's Inc., I believe that's the rent-to-own place, off $1.86. Ascena Retail Group down $2. Noodles is off $1.31. Our call number 877-927. 6648. I said that we'd go check out Goldilocks Silver, the whole commodity, well, part of the commodity sector out here. Let's take a look at gold. Right now you've got gold trading out at price, well, it's unchanged here, $1246.90. This is a 10-minute chart. Okay, so I got a 10-minute chart on gold. Let's instead of the 10-minute chart, let's go take a look at one of the other longer-term charts. Just trying to figure out, as gold was pulling back, maybe what was it doing this morning. Looked like maybe it was going to try to make at least a 1-to-1 A to B equals CD down. A 10-minute chart is what I was looking at 440 this morning. Little hammer candle forming the potential B point of the A to B equals CD. That C point is not correct now. That came in at 440, the price level 1244.50 out there. That level was broken here at about 8:20 this morning as we saw a close at 1246.10, but that doesn't look like the pattern there. Let's look at a longer-term time frame in any event here. Give me a second here. Window tile vertical. Let me find my... Oh, man, I deleted that chart. I got to watch what I do sometimes. In any event, that's okay. It's easy enough to rebuild. Let's take a look at the daily chart, though, see what we've got here on the daily chart for Goldilocks. Gold here, now, what I'm showing is the descending price channel out here, and the top of this descending price channel can move slightly out here. I think this these are pretty good lines, and when I say that, what I've done here is really lined up the bottom of the rising price channel out here, and then I've maintained that same angle along the top side of this descending price channel. So what we can see here is gold has not really made it all the way up to that level. What gold, in fact, did do, though, on Friday, was it closed above the B point of an A to B equals CD. So gold actually confirmed an A to B equals CD pattern. On January 6th, the high, 1247.70, 114,000 contracts. And on Friday, we saw 123,000 contracts, and it closed just over it, 1248.50. That sets up an A to B, a confirmed A to B equals CD up. If we take a look at what that looks like now, as I mentioned in the past, every now and then, it doesn't happen often, but every now and then, the swing point that you use for your B point of an A to B equals CD can also be the swing point low for the A to B equals CD pattern. That's exactly what we have here, because you had gold trade up to 1247.70. That's our B point, but the low of that session also was 1212.60 out there. So that becomes the B point. If I just pull it all the way down there, it gets kind of confusing. I'm just going to move it off to the side out here. So if I move it off to about that 1260 level, I won't be able to hit it just exactly, but I'll get pretty darn close to it. Says that we ought to see a 1-to-1 A to B equals CD that will go ahead and tackle that descending price channel. So this is really the cool thing, in my opinion, because with gold having been so hammered, so trashed for a good reason for a while here, what we've got now is an A to B equals CD pattern. I don't care how you draw these trend lines, these channel lines out here. One thing is for sure, and that is this. We've got a confirmed A to B equals CD up. That's going to take gold, or should take gold, above any of those trend lines to the downside. And folks, that will absolutely that'll be one of the charts that every technical trader will be looking at. Now, what really is set up here with Friday's price move is more likely a move to about the 1297 level, not just the 1279. It could be 1297, it could be 1320 out there. Of course, that means that gold needs to maintain some of its acceleration flow, which it has not exactly done here just as of yet, but just give it some time. So we've got a confirmed A to B equals CD inside of Goldilocks that should take the price above that descending price channel out there, and that is what we want to be paying attention to. In the case of high-ho silver out here, if we take a look at Friday's action, here's a 10-minute chart. The 10-minute chart here, where we can see that silver did off of the low, and this is a 10-minute chart again from January 8th, that low out there at a price level of 1931. If you go from that low to the high that was put in here, this was getting into the time frame of about 8:30. last evening, up at $20.36. We can see that it made really a perfect 0.382 retracement down to the 1996 level out there. So it's done a little bit of a retracement, working off a little bit of an intraday overbought condition out here. But let's go take a look at the daily chart out here, see what the daily chart. So where silver had been acting stronger than gold, now all of a sudden gold has picked up the steam, full steam ahead. Now in the case of silver, it did not get above that swing point. It did not get above the January 2nd high, which is $20.44. That had 44,000 contracts. Instead, we did about 33,000 contracts on Friday, but it closed still below that. So that's really the level. Now, what silver has done, silver has broken above its descending price channel. No question in my mind that it has done that. I think that is a really solid price channel level. So silver, to a certain extent, is already above the descending price channel. So in one sense, it's stronger than gold. In another sense, because gold went ahead and confirmed an A to B equals CD up, it's a little bit weaker than the signal that we're getting from gold. However, what you've got really in both cases are bullish signals, bullish trend change signals. That's what we have going on inside of Goldilocks and silver. Inside of light sweet crude, here, this is suggesting that it's really on its path down to lower price, about 84.71. It has gotten into the oversold condition. So really, and it did that here as it made a low on January the 9th, as it got down to 91.24. We saw a little bit of a bounce. In fact, there was a bullish engulfing candle that took place on Friday. But as we see here today, that is totally getting erased. And so I would not exactly say that 91.24 is much of a support level. It's got a confirmed A to, well, I take that back. It's not really a confirmed A to B equals CD, but the price, the swing point from November 27th is being tackled, has been tackled with some volume out there. But still, until you see a close below 91.77, it's just a little bit of a battle of of a swing point as we speak here right now. But it does look like the A to B equals CD down is forming out here, and that ought to take light sweet crude down to 88.15 at a minimum, more likely $84.71 or so. Don't pay too much attention to the pennies out here. Bonds having a big, strong, powerful day on Friday. So powerful that they broke a trend line. And so that is pretty interesting. Bonds here breaking a trend line with conviction. They've done the 0.382 retracement. They stopped right at the 0.382 retracement, right around the 130.25 level, doing it with a wide-ranging bar. That is a strong bar. Not just so in this case here, if I were to measure bars from 0 to 10, in this case here, let's go ahead and give 10 as the strongest out there, because that's what you're used to. That's a 10. Yeah, it's a 9.75 out there. Okay, so it's not a Olga Corbett kind of a 10, but it is a pretty darn good trend out there on the balance beam, and it broke the trend line out there. It did it with a very strong candle, got up to the 0.382 level. Guess what? It says 132.21 is likely the next target, the next stop here for the 30-year Treasury. Nothing more than just the normal 0.618 retracement of the move down out there. Broke a trend line. And that is what's going on inside of the 30-year Treasury. If we take a look at natural gas out here, natural gas, man, made the 1 to 1.272 A to B equals CD down. That price level projection was $3.95. I'm looking at the G contract. That is the February contract out here. Gets down to an actual low of, well, $3.95. You got to love it. So it gets right down there. And that candle on Friday was not bullish. However, boy, you go ahead and you put today's candle together with Friday's candle, and you can stitch them together. Of course, if you're going to stitch that together, you really ought to stitch the prior two sessions together as well. And so that says, boy, still a little bit suspect out here. So you'd want to really be paying attention to the volume inside of natural gas today. You might want to switch over, take a look at the March contract, or take a look at them both out here. But so far, that candle today, fairly impressive. We'll see how the session ends out here, because that A to B equals CD down was indicating it really wanted to get to a little bit lower price. But right now, that is a different story out there. Let's go take a look at some of these stocks that are popping and dropping in the marketplace. Let's take a look at, let's go take a look at SodaStream getting crushed here this morning, down about 20% off, $10 and change out here. So let's go see what this stock chart looks like. SODA, SodaStream, man, down with volume. Let me see if they reported numbers or what it was that they actually did out here. This, I don't drink soda, so I can't really comment on just how good this thing is or isn't out here. They say they expect some headwinds to follow here in 2014. I don't know. I just don't see the numbers here on my screen. Doesn't matter. We do see the numbers, and it's called the stock market numbers. It's called price and volume. So let's just delete everything off of here. And, this thing... Let's see. So far today, we've been trading for, let me get about 15 minutes in trading, and this thing is down today with 2.6 million shares. Now, it's got a high volume bar that it's going to try to go tackle. It's really going to head down to the swing points out here in November of 2012, right around the $33 level. It's coming into that area with volume out there. Let's take this back a little bit further. In fact, let's take this back. Let's take this back on a weekly chart. Maybe we'll get a little bit better feel on a weekly chart out here, but does not look very promising when you take a look at it. So looks like, what does it look like? What's it look like to you out there? Let's take a look at just the A to B equals CD down here. Give me a moment here. The 8 point out here, this little high wave candle that took place on June 14th. That was out at 77.80. I'm going to use as my B point. The low came in on July 19th. The week of July 19th out at $55 even, Steven. So it is now, makes the 1 to 1.272 today with the gap down. So clearly A to B equals CD says, it's going all the way down to the bottom. That's it. It's going all the way down, probably to its IPO level, maybe lower. Who knows? That's on November 5th out there, around 24.75 to 32.25 out there. That is on SodaStream. Hope nobody out there. Maybe you own a device, but I hope you don't own any of their stock out there. Let's take a look at Lululemon. Haven't looked at that stock chart here for a while. That is trading. LULU is a ticker symbol. They're trading off 15% here this morning. Looks like another gap down with some good volume behind its move out here. Not an exhaustion gap. There are 3 gaps that are very clear and visible to the eye. That first gap was the largest. It looks like, that was the largest for sure. That was the gap on June 11th. That was trading down with 28 million shares here. Another gap down here recently back in December 12th to be exact, 25 million shares on that gap down. And today so far it's done 5 million shares in 17 minutes of trading. So Lululemon, which at one point in time was a darling. And when these IBD stocks fall, folks, they fall from grace faster than anything that you have seen out there. So you don't want to be too overweighted in any of those IBD momentum stocks out there. In this case here, if we take a look at Lululemon right now, it is trading below its a swing point out here from August. This is a weekly chart, the August 3rd time frame. That price level was 52.20. What does that set up inside of Lululemon? Sets up at least coming down and testing this consolidation. Could be just consolidating. It's possible. It's a high volume bar, and that's the week of December 2nd. And that low is 41.70. So 41.70 is where we ought to see another test here of Lululemon right now, trading at $50.49. I hope you don't own any of that stock as well. Let's take a look here at some things moving to the upside. And let's see here. I don't know if this, I'm going to assume that Enpro is some kind of a buyout, so we're not going to go there. But let's take a look at Alnylam Pharmaceuticals, AL. This is going to be a show up. Let me just switch my tabs out here. Chart. ALNY is the ticker symbol out here. And this thing is gapping up with volume, so just the opposite. So this is good news. I like to look at good news, don't you? If we take a look at good news out here, this is gapping up today. Big gap. 587,000 shares already today. Now, this doesn't trade a lot. In fact, on average, it's probably about 5, 6, 7, 800,000 shares per day. So it's up nicely. And everybody in this thing, they are happy campers because everybody is in the money. 877-927-6648. Dow is down 17 points. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Let's go check out the currency markets out here. Let's go see what we've got going on with the Queen Mom, the Euro. Here, Euro U.S. dollar. This is a weekly chart that we're taking a look at the moment. Let me refresh my screen out here. And I say the Euro, right now, the Euro U.S. dollar becomes a difficult currency pair to really trade. It's really in a very tight trading range. You know, this little, what you got to, if you're watching us on TigerTV, I know there's many lines. I got horizontal horizontal primary trading range lines on this. I've got some support and resistance lines. I've got diagonal lines, both descending price channels and uptrend channels out there. So I suppose it can become confusing to you. The one that I want you to really be paying attention to is the dark red line. That's the descending line. So I want you to be paying attention to that. And then what's forming the real cone out here, I want you to be paying attention to the blue diagonal line on the bottom out here, where that is the uptrend price channel. And so we can see that this is truly the area where we have price traveling within, and we want to see which way price breaks out of this channel. And I can't tell you which way it's going to break. Instead, it's better just to sit back and relax and or look for a better trade out there in the currency area. But I say right now, the euro U.S. dollar is really not the place to be. Just too tight of a range out here, too much of a battle between the bulls and the bears. And I know this could go on. This is the weekly chart again that we're looking at. So this could go on for quite a while out here before it resolves itself in any one direction. Not necessarily the case in some of the other currency pairs. Let's take a look at the U.S. dollar, Japanese yen out here. This looks like this is now formed or is forming the A to B equals CD down. Actually, we're not even going to go there because really, if you take a look at Friday's session, it almost got up to the swing point A that I would use my A from January 2nd. So in this case here, the U.S. dollar, Japanese yen, again, if I put this on the longer-term chart out here, the real trend in this is the U.S. dollar, Japanese yen. This thing broke through the descending price channel. That's one that goes back to 1998. So that's important to watch, and it's important to watch from a couple of different perspectives. Number one, what you ought to really be thinking is you ought to be thinking long trades until or unless we see the U.S. dollar, Japanese yen slip back into the descending price channel, much like it did when it last broke through this level, which was back in 2007. So in 2007, back in May, it broke through there. It held into the June time frame, and by July it had dipped its head. So 2 months later, it dipped its head back into that descending price channel. When you do that, you often go back down and you test the bottom, and that's exactly what took place inside the U.S. dollar, Japanese yen. So we're going to know here at some point in time probably in the next couple of months, whether or not this breakout here is real inside of the U.S. dollar, Japanese yen, and by real meaning a total change in trend in this currency pair out here. So we'll certainly be keeping a close eye on that. Let's go check out the Great British Pound, U.S. dollar. Let's go see what it is doing here this morning. We've pointed out inside this currency pair, this is the weekly chart that we are looking at, just the struggle that it has when it gets up to this level here, this black black horizontal line going across my screen. That is a big, huge price channel, a horizontal. And it's not really a primary trading range. It's really what I'm using here is the swing point going back to January in 2010. And if it breaks, now it's a big, good old consolidation out there. So if it has the will, if it can break to the upside there, that will be a huge move, and then you would be looking for long trades. At this stage here, that is not the case. It's acting as a resistance point. So, folks, if you're off to start your Monday, have a marvelous Monday, and always remember this, and that is that you do have an amazing power within yourself, and that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday, folks. Look forward to seeing you soon. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.